Some of my clients that can fully document their income still choose the asset-backed loan. And I'll explain why. So I'm a loan officer. I help people get mortgages to refinance and sometimes get cash out of their house. So in this case, this guy comes to me, explains that he's buying a $900,000 house and he wants to put $200 down. He wants to finance $700,000, but he wants the absolute lowest payment. He doesn't care how he can get there. He just wants the lowest payment. When I ask him why, he explains to me that he's got a couple things that are going to come through and he'll be able to pay that $700,000 off in the next 4 to 6 years. So right now, he wants to keep his cash flow good with a low payment. So at first, we discuss just a traditional 30-year loan where you document your income, pay stubs, W-2s, and he has the income, no problem. He goes, what about an ARM? I want a lower payment. So I give him the ARM payment, and it does save him a little bit of money, but really not that much because the ARM rates are not that much lower than the 30-year fixed rates. And now you take the risk of the mortgage, adjusting after 5 or 7 years, even though he thinks he's going to pay the loan off. He goes, is there no option to get a lower payment? I said, well, what kind of assets do you actually have? And he goes, what do you mean? I said, well, you're going to put a couple hundred down. You're financing 700. What do you have in assets? He goes, I don't know. I have a retirement account, a brokerage account, a cash account. And we have a whole conversation. And all in, he had about $1.2 million after the deposit. I said, okay, how about we throw out the pay stubs, the W-2s, we just get rid of your job. We get rid of it all. And we just approve you with an asset-backed loan and we give you an interest-only payment. When I quoted that payment, it was much lower than the 30-year fixed. It was much lower than the ARM payment. It was just an interest-only payment. And he goes, wow, that's significantly lower. I was like, yeah, but when you make that payment, you're not going to be reducing your balance. It's just interest. He goes, that's perfect for me because when the money comes in, I will pay this loan off, but right now I'll have the best possible cash flow. Interest only on an asset-backed loan sometimes is the lowest payment, even if you can fully document your income on a traditional loan or an ARM.